So we're going to discuss a very important concept called the subsequent events from an audit point of view. Let me begin with an example. I have Messrs. Foolproof Limited having the financial year from the month of April to March, who've appointed Mr. A to be their auditors, who's expected to issue the audit report in the month of June. Now what happened during the interim period, during the period of March to June, is a major fire broke out in their godowns, destroying 90% of their capital assets. Mr. Auditor was under the impression that his audit is restricted to the period of April to March and issued the audit report accordingly. A lot of people, unaware of the fact of the fire breaking down in the godown, subscribe to the shares of Foolproof Limited and hence face major losses. Now who's held responsible in such a scenario? So in order to safeguard the interests of the public, our Auditing and Assurance Standard Board of ICAI have formulated SA 560 subsequent event. Now this SA holds the auditor responsible not only for the financial year during which he has to conduct the audit, but also for the period from the financial year end to the issue of the audit report. So the subsequent events are the events that occur from the end of the financial year to the date of issuance of the audit report. Now what all can an auditor do, or what as an auditor should I do to convince myself that all the subsequent events have been reported? The very first and the foremost thing would be audit evidences. Those are the documents. So I can refer to the documents to ensure myself all the subsequent events have been noted down, have been currently taken into account by the management. Now documents like minutes of the meeting, which will enable me to have an idea about the business discussed, the business progress, and the ideas of the management. So what as an auditor can I do to ensure myself that all the subsequent events have been taken into account by the management? Firstly, I can refer to the documents like that minutes of the meeting, which will help me understand the business progress, the management's idea and their future plans, the budgets of the company, and also the interim financial reports. Also, the auditor can have an oral or the written inquiries with the management for subjects such as whether any contingent liability existing at the year end, that is at the 31st of March balance sheet, I've mentioned certain items as contingent, have those crystallized during the interim period? Are there any major sale or purchase have been undertaken? Are any major part of the assets have been discarded? And hence with all these taken into account, the audit report should accordingly be modified. So the conclusion of our study would be that the auditor is not only responsible for the financial period under audit, but also the subsequent event that takes place later on. And accordingly, the audit report should be modified. Thank you.